Thank you all for joining us this morning, taking the time to hear from us. I'm Andrew Dane, I'm the Chief Exec. I'm joined here by Billy McCarter, CFO of the Artisanal Spirits Company. And just as a quick reminder, the Artisanal Spirits Company creates and sells outstanding limited edition whiskies and experiences around the world. And we primarily do that through the Scotch Malt Whisky Society. And if we turn over to that page, you'll see here, what is the society? What is the Scotch Malt Whisky Society? Well, it's global. It is a direct-to-consumer premium business selling limited edition whiskies, primarily online, exclusively to that worldwide fee-paying membership. How do we do that? We're not a distillery. We procure whiskies from a wide range of distilleries. We've just bottled our 157th single malt whiskey, which will be released in due course. We're maturing 17,000 casks, creating over 1,000 products last year, and we bottle those under our own brand. And as I say, selling them exclusively to members. But we're about more than just a shop for great whiskey. It's also about the experiences that go with that. And I'll talk a lot about that today, including those 4 member rooms in the UK, 1 here in London, 2 in Edinburgh, and 1 through in Glasgow. So if we turn over and talk about the kind of strategic framework for the Artisanal Spirits Company. Our purpose is to captivate a global community of whiskey adventurers. We're going after people who are on a flavoured journey. They want to explore and try the variety of unique whiskies which we have. But our ambition is to create a really high quality, highly profitable and cash generative premium spirits business. And my view is we will do that by delivering the world's best whiskey experiences. And by doing that, we remain on track to deliver our ambition of doubling sales to 30 million by next year. And in the short term, that's the path we're on, including inaugural EBITDA positive this year. Now, when you think about what we've been delivering this year, we're going to talk about both strategic progress as well as financial and operational progress. I'm going to talk a little bit about strategic progress first, then I'm going to hand across to Billy to talk about financial and operational performance. So from a strategic perspective, you can see at the bottom of this framework are 5 strategic pillars across membership proposition, membership experience, our liquid, reach, and our people. And if we go on to the next page, you can see some of the initiatives and objectives, strategic objectives we've been working on for this year that we will touch on as we go through this presentation. So we'll bring that to life a little bit. When we talk about our membership proposition, an example is right here in front of me, which is our new membership and a bottle pack. That'll be available or on sale later this year. From an experience perspective, refurbishment of the vault and the vaults, the kind of spiritual home of the society in Leith. Driving value from liquid with our prestige product range, as well as cask sales program, all of which I'll talk about shortly, as well as Masterton Bond, the supply chain, cask warehousing, bottling, and order fulfillment, all being in-house now as of the end of May. Market reach, both in SMWS markets like the Taiwan launch, as well as looking at how we can expand into new markets like America. And then finally, our people, with real strengthening of the exec team with the promotion of Billy here, promotion of Rebecca Hamilton as our marketing and experience director, bringing physical and digital experience into one place, as well as the addition of Chris Leggett to the team as business development director. So we've seen really good progress across all of these objectives, and we'll talk more about them in due course. But I'll now hand over to Billy to give some of the headlines and the detail around financial and operational delivery too.
Thank you, Andrew. Move to the next slide. So on this slide, break it into 3, growth on the left, membership in the middle, cask spirit on the right. So firstly, good performance. We've delivered revenue growth year on year, just over 3% at £10.2 million, delivering a strong gross profit, still above 60%. And we'll come on to talk a little bit more about the diversification of that revenue and our belief for full year delivery. In terms of our membership, what underpins our business is our members. So we're up 9% year on year in terms of our membership, which is fantastic. We've also got a very strong retention level, which although is marginally down before, is way above pre-COVID levels, which sat around 69 to 70%. And our lifetime value as a directional KPI, as a reminder, is still up 35% since IPO. And one thing we always talk about is the strength of our balance sheet. So we're currently sitting with around £24 million of cask spirit on our balance sheet. As a reminder, that's held at cost. We must hold that at cost. But certainly in the last year, we've seen significant inflation of that value. And the middle section of that slide is to highlight. So essentially an external valuation, which we do in conjunction with our bank, actually values that £24 million of cost held on the balance sheet of our cask spirit at £38 million, which is a significant appreciating asset. And as a reminder, bottom right, if we were to bottle every one of those casks, all the spirit that came out of it, it'd be roughly £500 million. So it's a really strong balance sheet and future opportunity to deliver essentially what our members want. So if we go to the next slide, this shows again, we're always talking about how diversified our global revenue is. We delivered £10.2 million in the first half, which is up 3%, as I mentioned. And there's some key drivers of that. So UK venues continues to perform well from the end of last year, posting its strongest sixth performance on record. We've also seen continued growth in Europe. And what we'd also like to highlight is continued growth in markets like Japan, where since IPO that's continually grown. So that's fantastic. There's no doubt China has had a slower Q1. From a relatively flat overall group performance in Q1, we delivered plus 7% in Q2. And that was predominantly driven by China in the first half as they essentially came out of COVID lockdown and a lot of people contracted COVID. But what we've seen is momentum in Q2, it's continued into Q3, which gives us confidence that we remain on track to deliver a full year target of around £25 million revenue. As a reminder, you'll see on the slide, TAM, the total addressable market, that just shows the size of the opportunity that remains for us. We're 0.3% in the markets we currently operate in of the total addressable market. So there's huge penetration opportunity there and we'll continue to. So at P&L level, on the next slide, what that leaves us with is an adjusted EBITDA loss of 1.8 million in the first half. Now that is a result of the weighting of the half one, half two revenue delivery. We've always said since IPO our business strategy is to invest in our systems and our people to improve and deliver growth. That remains the same. It's simply the delivery of revenue in half one is lower than delivery in half two. It's much more half two weighted. And as I've said, we are on track to deliver that half two weighting and therefore deliver the revenue and EBITDA expectation in the second half, which deliver full year expectation. If we could move to the next slide in terms of balance sheet, what that means from a cash flow perspective. On the left, we've got a balance sheet. I've already mentioned too much. That strong net asset value driven by that cask spirit holding, so 24 million, and a net asset position of 18.7 million, which is really strong. From a cash flow perspective, it's important to recognise we remain in line with what we said we would do. So our cask investment is starting to peak. As you can see, there's a net cask spirit spend on the right there of 0.7 compared to prior years. That will be lower, and we said it would be and it will be. And some of the important bits for us is change in net working capital is flat. And ultimately, the operating cash flow that you can see in the slide is the half one, half two weighting. As we deliver the half two profit and cash, we expect that to move into the marginal positive territory. And again, we do what we said we would do and remain true to our strategy and our objectives. Thank you.
Good. Thanks, Billy. So we then think about the kind of the rest of the progress across our kind of three strength areas of the business, the pioneering model. And in particular, that's about that loyal, valuable, growing global membership. And if you look to the next page, it shows that breakdown of membership, contribution, and lifetime value across all the markets. As Billy said, it's not a directional metric. It's an indicative metric that shows the value of members around the world. It shows that the quality of those members, their level of engagement, as well as the high margin of the model, delivering that lifetime value. And that's true across all markets. And as Billy says, that's up 35% since IPO, though it is down slightly on prior year due to that drop in retention, but retention is still very high at 74% around the world. So the proposition does continue to land. And as a reminder, what we're here to do is to drive overall contribution across the whole business. And that comes from growing membership, growing the levels of engagement of those members, driving up margin, and improving retention and why people want to be a member. And overall, the net effect of that comes through in that lifetime value. We go to the next page. Pardon me. One of the things that's really worth reminding everyone is Scotch Malt Whisky Society operates a truly hybrid model. Both in-person and digital experiences are really important. Now, how that comes to life does differ by market, and I'll touch on what that looks like across the four biggest spaces of the UK, US, Europe, and China. In the UK, it's most obvious with the 4 member rooms, and in the top left there, you can see an artist's impression of what the vaults are going to look like post-refurbishment, and that's due to reopen next week after a £500,000 investment in the spiritual home of the society. We've learned the lessons from what members tell us about why they love coming to venues, being able to talk to staff. So there'll be a much bigger bar area where people can come and talk to the team there, as well as being able to see more of the bottles on display, and just really get to enjoy that wonderful, wonderful venue. But also investing in the digital space, and with the launch of an app later this year. Initially, the functionality will be around shop functionality, because we know that most people in the UK are coming to the society on their mobile phones and making that as easy as possible for them. Now, similarly in the US, we don't have venues, the 3-tier rules prohibit that, but we do have as a network of brilliant partner bars. And I was at both Jack Rose in Washington and Brandy Library in New York earlier this year, seeing members enjoying the society come to life, but again, also pushing on that digital side. So we've just relaunched the US website last month, making that new member, new visitor journey so much easier, with a pathway of, are you a member or not? Yes, and you go into the shop. No, over into path of, are you here to buy for yourself? Are you here to buy a gift? Which bottle would you like with your membership? Making that journey really easy. Again, in Europe, we see the same thing. We've seen our network of 66 partner bars across Europe, really driving events, in-person activations, combining with some great festivals across Europe this year, meaning that Europe is our fastest growth membership region, with new membership recruitment in Europe up by over 30% year on year. So that's been brilliant to see. And that's coming through now, both membership and spend. And then last but not least is China, where again, although the e-commerce drives almost all of the sales, in-person is still important. And August of this year was our joint highest ever month of new member recruitment. About 3/4 of that came from the Whiskey L Festival, the biggest whiskey festival in China. About 30,000 people attended that, and a few thousand of them came to the SMWS stall and joined up. About 120 new members joined over 4 days at that festival. But we supported that with a TikTok program where we created a series of short video content around knowledge and engagement. So what is Scotch? How is it made? Telling people and educating people about Scotch whisky, but through the lens of the society, and then guiding them and to recruit them into the SMWS. We recruited about 20-25 people through that campaign, which doesn't sound like a huge number, but if you remember on the previous page, average lifetime value of a member in China is £3,000. So that's over £60,000 of gross lifetime value from one campaign on one channel in one market in 1 month. So that sort of brings to life that hybrid. And if we turn over, again, another space that I just talked about, being released very shortly, a personalised experience for new members, helping them to navigate into the society, and importantly, making that experience feel, wow, a really impressive experience to join, and getting liquid to lips, getting a bottle in front of new members as soon as possible, because we know that by revealing the magic of our unique and outstanding whisky, that's how we get people excited and engaged. So that'll be on sale in the UK before Christmas time, and then rolled out to the markets as soon as humanly possible. So if we now turn over again, you'll also see that we've taken advantage of the fact that it's the Society's 40th anniversary this year, born in 1983. We're going to be releasing this absolutely stunning 40-year-old whiskey, which I've had the pleasure of tasting, and I can confirm it's absolutely wonderful. So that'll be released in October. UK price of £3,000, slightly higher in the international markets, but very much looking forward to that being on sale in October. So that's just some of the examples of the kind of initiatives that we've been working on and paying for in H1, but where the benefits come through in the second. The next key strength of the business is around that long-term global growth opportunity. And as Billy referenced, if you turn over to the next page, it really is significant and growing addressable market driven by premiumization. Globally, the ultra-premium Scotch whisky market for ultra-premium price points and above is over $8 billion. And importantly, over $6 billion of that is in markets that we are already present in, mostly in those top markets as shown on the page. And it shows why this year's move into Korea in April, being 6th on that list, and Taiwan changing to a subsidiary and a much more direct model in Taiwan in August are so important and support our ongoing growth. And that growth being driven, as you can see in the next page, 50% growth in that addressable market being driven by the continued premiumization of Scotch. So that really is significant growing addressable market with premiumization trends being driven by consumers looking for authenticity and status, provenance of the product, all of which lends itself so beautifully to what the society has done so well for so long. So it's nice for everyone to be joining us. If we now turn over again to the final pillar around our robust business, primed to deliver. Billy referenced high margin over 60%, contribution of over 50%, really unique access to wonderful whiskies. And I'm going to talk a little bit about that now on the next page. So if you think about our investment in casks, that was a key use of IPO proceeds. To wind the clock back a couple of years, £15 million of IPO proceeds to the company. And the idea was never to pay down debt, it was always to invest in stock and assets, with about 80% of the IPO proceeds being used to invest in assets, spirit, wood, and Masterton bond. And we're seeing the benefits of all of those already. But I thought it would be useful to sort of split that into two examples here. On the left-hand side, £3 million invested into older, rarer casks, the higher price point, but where there's an opportunity to generate both short-term and long-term value. So some of those going into society bottles right now, being sold through normal channels, generating a great return and bringing real fairy dust bottles to members around the world. But also some of those casks can become our 40-year-old whiskies in due course as well. So short-term and long-term value. And then on the right-hand side, long-term value generation from this strategy of investing in younger and new make spirit. £3.5 million invested since IPO in around about 3,500 casks that we currently hold now, which are bought when they were under 3 years old. So a very different price point, but that provides both long-term value by the appreciating nature of the asset, as well as a significant inflation hedge. And it's both that appreciation and inflation that drives the bank valuation, which has gone up by £10 million this year. So that is value which is accrued to the company this year, but isn't in any P&L or balance sheet or in any of our numbers or accounts. Because we have to be patient and wait for that to come through as we sell the product in due course. Now, this represents an opportunity to us. And if you turn to the next page, we'd always had an objective of looking at how we do more in the cask sales space. Now, we've always done some level of cask sales to trusted industry partners, and that continues as part of the trading nature of the Scotch whisky market, working only with people who we trust as we swap products and get access to rebalance our stock portfolio. But we've also always been approached by people looking to buy casks, and we want to steer well clear of anything that smells of speculative investments, cask investment schemes. That's not us. That's not what we're trying to do. But what we do want is we want to allow people who really want the whisky, who want to take advantage of that wonderful liquid. We want to give them the chance for something different to what they get at the moment. So we've launched a private cask sales program, which is where society members can buy a whole cask worth of society bottles with a personalized touch. And we're choosing very carefully what those products are to make sure that this isn't about taking the crown jewels and selling them off to a small number of people, but where we have more than one or multiples of casks of a similar nature, where we get to release some in the normal way to members around the world, but where we can also put some into this space. And that's going to be both at this premium end of the space where casks are tens of thousands or hundreds of thousands of pounds with a really premium feel, all the way through to an initiative which will be coming out in the coming weeks, where there's an opportunity for a much broader part of the membership base to have an opportunity to buy a cask's worth of bottle of society bottles with a price point that's in the thousands of pounds rather than tens of thousands. So really excited to come and tell members more about that in the coming month. So that's when we talk about cask sales, it's really about those three bits. Trade sales, ongoing into trusted partners, private cask sales at both premium end, and then also into the wider base. And then finally, our people who support it all. And being the best version of ourselves is about both the people, that significant uplift in the quality of the executive team, as well as the wider culture, sustainability, governance of the business that means that we're best set for long-term success. Billy says we've invested in people, platform, and systems to support our growth ambitions, and we're doing well on that journey. So I'll now just finish up by talking about our view of what the future holds and current trading and outlook. So in the few weeks and months since the end of the period, we've continued to see growth in membership, now above 39,000, including that successful launch of the new subsidiary in Taiwan. And then as we look ahead to what we expect from the balance of the year, after relatively low levels of revenue growth in H1, accelerating into Q2, we see a continued acceleration of revenue growth in the balance of the year, with the positive impact of Taiwan and Korea. Remembering they're new to this year, so no comparatives in last year. Better momentum and weaker comparatives in China. Timings of shipments into the US, where we continue to see growth in membership supporting growth next year that we will ship and recognise revenue for this year. And further progress on those cask sales in the balance of the year, as well as the contribution from those strategic objectives. New app, membership in a bottle, 40-year-old product, etc. And therefore, we remain confident in our ability to deliver this year's consensus forecast, including that inaugural positive EBITDA. Now, as we look longer term, it would be disingenuous to ignore the fact that there are ongoing wider macroeconomic conditions, and that the world looks like a more challenging place than it did a few years ago. And therefore, instead of saying that all of these initiatives and objectives allow us to outperform our targets, they're helping support the delivery of what we said we would do. But our globally diversified footprint, the loyal, highly engaged membership, and the demographic of that membership, which helps insulate, not immune, but helps insulate us from the conditions. That significant growing addressable market premiumization trend helps make sure that we feel confident that we are positioned to continue to grow well, initially on that ambition of doubling sales by next year and continue to grow thereafter. Thanks so much, and I now look forward to hearing any questions.
Thank you both, and we have a number, so let me begin. Why did you choose different operating models in Taiwan and Korea? Obviously, on one side you've got franchise and the other partner.
It's a good question. So again, if we just step back, the society is one look and feel around the world, but our corporate operating models do vary by market. So 100% owned, locally managed across the UK and Europe, majority owned, locally managed in markets like China and Japan, and now Taiwan, where we give the managing director part of the equity as an incentivization structure. We then also have franchises around the world, which Korea is a new one. And then in the US, we have a different structure because of the 3-tier system. Now, why different in those two different markets? Franchises are a really good way to seed a new market, low cost, profitable from day one, and give us a chance to expand into new spaces quite quickly and easily. We'd never been in Korea before, so we thought that a franchise was the right approach to take a first step. Now, rather than places like recent franchise in South Africa or Mexico, where we just worked with the partner of our owner, someone who already knew and loved the society and expanded, converted that into a franchise in recent years. Korea, we actually did a kind of beauty parade looking at different franchise partners. And FJ Korea, who we chose to go with, blew us away with how they really understood what the membership was about, what the society was about, and they've done a wonderful job there. So that's why we felt like franchise was the right approach into a new market. By contrast, we've actually had a franchise in Taiwan for a number of years. Now, Taiwan has very specific alcohol rules, including the fact you're not allowed to sell alcohol direct to consumer online, which is a challenge for a D2C alcohol e-commerce business. So what we've moved to there is what we call an e-commerce light model. So members still get the weekly emails about product releases. They can still come to the website, but they can't buy on the website. They get directed to express their interest, allowing us to fulfill the regulatory model around age verification, and they go and collect their product. So since we were changing that route to market, we took that as the chance to move from a franchise up to a subsidiary and take more of the gains in what we knew was a great market for us. Hope that helps.
Very much. Let's stay in the Far East. China's been volatile. What's the longer term picture, and are you confident in the market recovery?
Yeah, I think it's fair to say that China had been growing so strongly in the past. I mean, if we wind back to last year, 60% growth order of magnitude in H1 of last year. It's fair to say we're not seeing that now. And while there is better momentum in China, our view of ability to deliver this year doesn't really require any bounce back in China this year. So broadly flat perhaps this year, maybe slight outperformance we're seeing so far this year. And I think conditions there may continue to be more challenging than they were last year for a period of months, maybe a year or so. But one of the beauties of being so diversified is both global diversification means we're not dependent on any one market, as well as product diversification means in reality we might end up growing in China because the private cask sales program actually lands disproportionately well into Asia. So there are certainly still big opportunities for us both in China and the wider Asia market, though in the short term that's not quite as easy a win as it could have been maybe a year or so.
Okay, helpful. Thank you. Moving west a little, are you intending to enter the Indian market?
Yeah, certainly something that we're having a good look at. I mean, one of the challenges, two big challenges in India are, one, there's 150% tariffs at the moment. Now there are ongoing free trade discussions, but realistically 150% might become 100. Maybe might move down over longer periods of time, but it's not going to go away overnight. So that creates one barrier. Second is that India, a little bit like the US, isn't really one market. It's a whole series across the individual states and provinces. So that means it's not quite as easy an opportunity. However, certainly we're watching very closely the kind of growth in premium consumption of Scotch, and certainly it's something we would love to be part of. So no immediate plans in the coming days, weeks, months, but certainly one that's on the watch list.
Okay, thank you. We'll just finish our geographic canter. It's a bit less of a focus in the presentation on the US,
yep.
But online sales are doing extremely well. What's the plan there in terms? I mean, you mentioned there obviously you can't open direct venues there, but partner bars, etc., to help support that.
Yeah, so to say, in the US, there's certainly more opportunities for us, and that's both by doing an even better job with the wonderful Scotch Malt Whisky Society selling primarily Scotch into the American market, as well as opportunities in the American whiskey space. And in the short term, we're already making some tactical progress in that space, and we've sold more American whiskey in the first part of this year than we did in pretty much the 18 months before. So already making a little bit of progress in that space, but I think there's a bigger opportunity there, something that's more American whiskey centric. But venues is probably not the space for us. Now, if we look at venues in general, over the coming years, I think it is something that we would expand, but not huge numbers. Maybe one or two in the UK, maybe something else in London to support what is a great but quite small venue in Greville Street. Maybe places like Manchester, internationally, Europe, China, the obvious options. But one thing is, what would that look like could range. So obviously in the UK, we have a sort of established footprint where we own them, we operate them, our staff directly controlled. If we were to do something else in the UK, probably would look like that. But if it was international, say in China, we might work with a hospitality franchise partner. So we give them the brand playbook, make sure that the experience feels society, but actually the risk and execution, some of the CapEx investment is with with a partner. So it sort of approach to venues changes around the world.
Okay, well, back to London venues.
Yeah.
Obviously, you've done some capex north of the border. What's on the agenda for London?
Yeah, as I say, I mean, it's a wonderful venue with an outstanding team, and we were there last night with Simone and JP and the team there. It's a great venue. No immediate plans to do anything significant. We always continuously invest in venues. As I say, the actual size of the property there limits some of the options that we have there. So longer term, looking at how do we add to the capacity in London, but short term, there's no immediate plans for anything really big ticket. If there are ever specific concerns or things, we'll always address them, but no big changes in London immediately. Okay,
thank you. On to pricing. I mean, perhaps you could give a couple of, if we could start on casks.
Yeah.
What sort of price ranges would the casks be? And then perhaps also you could elaborate, maybe for you, Billy, on the gross margin attached to those casks and whether they're similar in profile.
So first of all, I would say just in general, our approach to pricing, I mean, it's hard when the product is unique, but we've always tried to be at or below a sort of median of what might be out in the market. So this is not about trying to price it at the maximum it's ever been, but it's also not, I'm a member and therefore get a substantial discount versus what you could buy out in the market. And particularly when there was a price increase towards the tail end of the last year, as you know, costs certainly took off everywhere. We're very careful about how we phased that pricing. And at the bottom end of the range, there was no price increase at all. So an 8-year-old, classic cask from Silly's there, no change in the price at all. As it walked up the range, the bigger increases were really once you got into the old, rare high end of the markets. We tried to sort of minimise the impact of price increases on the roller coaster. Now, it's fair to say that's still been challenging. You know, I understand the price pressures that everyone is feeling, and we tried to find something that is a fair balance across. So certainly no big price increases or changes in broader price strategy intended. When we then apply that same logic to the kind of cask pricing, again, it's similar. We're trying to charge a fair price for what is an outstanding and unique experience, but that will range from some of these private cask sales will be hundreds of thousands. Some of them might be high tens of thousands, but then also we're looking at how do we do that in a space for the broader membership base, which is in the thousands of pounds. Now that still could be unaffordable for many, but brings it into reach of a much bigger part of our society membership, and might even put it in a space where groups of members can band together and buy a cask together. So as I say, and more to come on that in the coming weeks, but that would be in the thousands of pounds rather than the tens of thousands.
And on the margin, as Andrew says, we have varying levels of cask sales. I can't therefore give you a specific number, but what I can say is it is complementary to our current margin. It will be at higher margin levels. It's depending where you say, it's still a premium offering, so it will only boost the margin of this business. Okay.
Excellent. And while I have you, can you talk us through the margin mix and why it's 2% down?
Yes, good question. So I think the predominant impact is the group mix of China. So as we went through the presentation, China has reduced year on year. So that's a significant impact on our group mix because China is one of our highest gross margin markets. That's around half of the margin impact. In terms of other impacts, we've got some pricing elements within that. Andrew mentioned pricing a minute ago at some of the higher level. Perhaps we've learned that pricing is too high. But otherwise, it's FX. So, for example, particularly in Asia, particularly in China again. So China, both in terms of FX and in terms of its performance versus last year, is a predominant impact of that margin hit year on year. But it's still strong, still over 60%. And the key thing is, with the delivery of the balance of year to hit the number, we will be where we expect to be on margin.
Okay, thank you. There's a question here about shareholder perks and how that could filter through to new members, but perhaps an opportunity to speak about a little bit more on the liquid of the lips proposition, Andrew.
Yeah, so we first of all talk about the shareholder benefits. So we do have a program. It's called the Spirited Shareholder Member Benefits Program. So that's for individuals who hold broadly more than £1,000, 1,100 shares, and are also a member. And that includes things like half price renewal, access to exclusive events. So last night we were at exactly that, a tasting event last night, as well as exclusive bottles, some of which were tasted last night. And I think people have forgotten that they are available for sale to members, so shareholder members. So we'll be sending a note on that in the coming days. So there's a range of benefits. Also includes occasionally discounts on J.G. Thomson products. We've had vouchers for use in venues, etc. So there is an existing, I think, quite generous shareholder member benefit program. So that's open to anyone, and new members and new shareholders can always join that program. There's information on our website. If anyone ever has any questions, they can reach out. I'm very happy to help on that. The second bit around liquid to lips, which is more generally about how the society expands its reach of audience. Part of the core proposition is exclusive access to full-size bottles like this of the wonderful product, which should be for sale just to members. But I think one of the ways we can bring people in is with tasting packs, the advent calendar, the other ways that people can engage and try some of our liquid. We know that venues, for example, are a great source of recruitment, 2,000 members joining venues. In part, that's because that's often how people first find out about the society. So for people who can't come to venue, how do we get some of the wonderful liquid in front of people? How do we get them to first experience the society? Through knowledge, through events, through miniatures, through the door, so they can try them. So that's where we're looking to expand that liquid to lips and get some great liquid in front of people as soon as possible, because once they try it, they know just how good it is.
Excellent. Are there any other Asian markets where you see sizable opportunities?
I think the biggest opportunities are in the markets we're already in. We're always looking at where there are other opportunities. But having added Korea, big change in Taiwan, as well as swapping out partners in Malaysia and Singapore recently, the kind of focus of those key changes having happened in Asia have now sort of happened. And now it's about depth, quality, reach in those existing markets. I think the markets we're looking at like that, building more depth, is the American market. We always have an eye out on where else would be good. And we talked about India earlier, and we sort of go through that lens of which the markets are big enough, which ones are the trends growing, which ones do the consumers' kind of whiskey education, whiskey journey is at the right stage for us. What do the commercials look like? What do the regulations look like? So that's the sort of lens through which we look. So I would expect to continue to moving into new spaces, but there's not another big Asian development in the coming months in the pipeline.
Okay, thank you. Is there an update on the value of the stock on the basis of its retail value? As the last number that this individual remembers was around 490 million.
Yeah, I mean, as shared in the presentation, that remains around the same. Ultimately, I'll go back to £24 million of cash value on our books, significant increase year on year due to of around 10 million, which Andrew also mentioned, which means the minimum broker valuation would be that is £38 million. As a reminder, we can't recognise that in our P&L or our balance sheet. And the value of the spirit that can come out of those casks is still around £500 million. The number of casks we held per the last presentation and results we did marginally increased, which is in line with our strategy. So that number is still around the 490, £500 million.
Yeah.
Okay, thank you. Finally, what progress is being made outside of the Scottish Malt Whisky Society?
Yeah, so obviously from JGT, the target this year was international expansion. So we got our first, it's quite a lot of regulatory hurdles to go through to get product into the US, as anyone who's ever dealt with the TTB will know. Pleased to say that the first shipment has arrived in the US ahead of sales in the second half of the year. So that's good expansion there. We are actively looking at how do we do more in the American whiskey space. And we looked at one way of addressing that market earlier this year, but probably would have been a cash investment and EBITDA drag, which in the kind of current market conditions would not have been well received. So looking at how else can we do that without needing an EBITDA drive, without needing a big cash investment. So you're already starting to see some tactical pieces, as I say, American whiskey sales within the society already growing, but looking at how do we do more for less in that American space. So I think that's the one to watch in due course.
Great. Well, that's it for the questions today. So thank you to you both. A reminder to everyone, if you could please do the feedback form when I end the webinar shortly. But otherwise, we look forward to an update in 6 months' time.
Thanks very much. Thanks, Hannah. Thanks everyone for joining us.